And if you're watching me on a replay, welcome to you too. You're taking time out of your day to watch a replay. That's pretty awesome. If you're watching on Facebook, excellent. But you don't have to be on Facebook. You can always just get the link in your Kate Walker Training profile in the One Start Here place. I'm just really going to talk about the One Start Here spot in your Kate Walker Training profile, because it has the keys to the kingdom. It has everything in it. And you can find actually even a course catalog where these will be hosted. And also, in case you didn't know, you guys, if you can't attend one of the free webinars, and we put them on your monthly calendar because we want our Step It Uppers to know about that. But if you cannot attend, you guys are the only ones that get the replay. So people can attend live and get the CEs, or they can be in the Step It Up membership and watch the replay. The replay is actually an NBCC certified CE as well, because I am an NBCC provider for online, but not for workshops. NBCC is weird. Like they may certify you for one or both. So I opted for the online NBCC provider. So actually for Step It Up members, if you choose to wait and watch that replay, you get the NBCC credit as well. Whereas if you just watched it live, of course, you get to interact and ask questions. So that's the fun part of live, but it is not an NBCC CE for live. Now, for the new rules, right? For new LMFT and LPC rules, don't worry. I'm a supervisor. So it's like, I got this. I'm a supervisor. I can fly the plane. No, I can't. But I can provide the 50% of the CEs that you need now with the new rules. So for LMFT, those rules are already live. They already apply to you. LPC, the 50% rule won't apply until January 1st, 2024. But just to keep an eye on that, if you're collecting CEs and you renew, like, let's say next February, you're going to need to have those 50% from the providers. We're not calling them approved providers because LPC board gets mad at us if we do. They're specific providers listed. I am one of those providers for that. So never worry about that. Unless, I don't know, they change the rule. Hey, who knows? But for now, I can give you the 50% CE. All right, on to the topic. So today is about tax hacks. And the way I define a hack is something that makes my life easier. So in terms of business, I want you to think of it as something that's going to help you scale your business as you grow. So, like those clickbait kind of things on social media that are like, 5 life hacks you never knew about, or I was today years old when I learned this, right? I love those. I love anything that can make my life easier. Like I found this command hook, those command strips you can get at the hardware store. And I found one that's just little, but it organizes all of my phone chargers. Like I put them everywhere, like next to my bed. At night when you're looking for the cord to plug in your phone, not me. I've got a command strip and I have it hanging right there and I plug my phone in. So I love tax hacks. I love any kind of hack, life hacks. So when I talk about tax hacks today, I'm going to kind of dovetail into the topic of clinical supervision as well. I promise I'm not going to make it all about supervision. I know we have a lot of folks on here that won't apply to, but I also know we have students on here and new associates who are watching. And it's really important, especially if you aspire to be self-employed, that your clinical supervisor can at least advise you on this. And as my good friend Kenda Dalrymple, amazing LPC attorney, once said in a presentation, you're probably not going to go to jail because you didn't dot your I or cross your T on a form, but you're definitely going to go to jail if you don't pay your taxes. So if you are one of those folks who agrees to supervise a new LPC or an LMFT associate in their self-employed state, in their private practice, first of all, God bless you. That's awesome. We need more of you. It's nice if you're able to advise your supervisee on some of these things. So I see we have a lot of people joining live, and looks like we got a lot of people watching as well. So I'm going to keep an eye on the folks who are watching. And if you want to type your questions into the thread, I will answer those too. So first of all, last week when I gave the training, I totally left off the tax write-offs for counselors. And I know so many people were watching just because of that. So I wanted to start with that today. Let me put my glasses on. And give me 2 seconds. So the important thing when you're looking for write-offs is the date. So when you go to the Google machine and you type in write-offs for small businesses or write-offs for counselors, it's important before you click that you look at the date. The second thing I look at, as a researcher, we want to see that we're getting the same information across multiple sources, right? So if you've got one person over here that's like, you know what, you can write off your gardening supplies as a counselor. If nobody else is saying that, let that one go. Ultimately, you're going to ask your tax professional or your attorney. They are going to give you the bottom line answer, not only because they know it, but they're going to tell you what they feel comfortable with, right? They're not going to let you write off something that's totally outside the line of your business. So I want you guys to think about it. I hope you've seen this movie. It's Everything Everywhere All at Once. I think it won a ton of Oscars. I didn't watch the Oscars, but the crux of it is we've got the main character, and she's being audited by Jamie Lee Curtis, who's an IRS agent. And here's the problem. It's very, very clear. Like the director of the movie makes it very clear that our lead character's job is she owns a laundromat. We see the machines, we see them break down, we see her interact with the patrons. And Jamie Lee Curtis is like, why are you trying to write off your karaoke machine? Why are you trying to write off your dance lessons? Right? Because when you go into business and you're choosing your alphabet soup, remember we talked about that, DBA, LPC, DBA, LLC, PLLC, 501c3, all of these things means you are telling the government, this is the type of business I'm in. Now, you guys remember your career counseling class. There's a whole list of categories of business. So if you decided on your business, whether it doesn't matter what you call it, which alphabet you list it as, if you've decided it is private practice, the government's like, okay, ding, 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 we know the typical write-offs for a private practice. Now imagine after COVID, that changed, right? Webcam, internet, HIPAA compliant Zoom software. Maybe 5 years ago, the government would have been like, hey, what are you doing there? I don't know if you can write that off. But now it's changed, right? And so it's not like this is a static list that never changes. You just need to be mindful. If you're taking trips and you're trying to write off hotels and meals, all of that's appropriate if it matches what you have designated your business as. So when I get asked, okay, Kate, should I start another LLC? My first question is it significantly different from what you're doing? And usually I talk about advertising and client facing because that's going to impact the rules. You want to make sure you're being transparent. But during tax season, I want you to understand it affects your write-offs. So if you're trying to start a second business where you're travel blogging, right, and you're going to try to just kind of fudge and file all those taxes together, the government might say, you know what, I don't think you can write off that new camera you bought to take photographs in Colorado just because you're posting it to your blog and you got sponsored by this amazing brand because you're getting so much traffic on your blog now, right? Because that doesn't have anything to do with what you said your business was. So today I am really just dealing with counseling practice write-offs. That's hack number one. Stay in your lane for your business when you're thinking about write-offs. If you don't commute, that means your mileage is going to be zero, right? Because you're not driving anywhere for your business. You can't count going to the gas station just because you need gas in your car, because maybe you might want to go to the office, and right, that's not always good, right? And I'm not an accountant. So I'm going to talk about tax write-offs for therapists. And I'm literally just Googling this, and I am looking, I see 2018, 2019. Nope, not going to look at that. There we go. 11 best self-employed therapist tax deductions in 2023. So if you're an SEO fan, that thing just hit the nail on the head, right? February 5th, 2023 is when this is listed. Google likes it. We got lots of good scores here. So when I click, and let me share screen. And remember, this is just an example. This company, whoever this is, they are not paying for Step It Up membership or sponsoring us in any way. I'm just helping you find good, reputable stuff. But it's up to you to make sure you take it to your accountant. So tax deductions for therapists, pre-opening startup costs. Guess what? That's not just therapists. That's everybody. That's a small business thing. So think about everything you need to start your business. Now, if you've been in business a while, don't despair. You can always go back and refile your taxes. So if you know you started in 2015 and you did not write off your stuff, I don't know, that's maybe more than 7 years. Let's say 2020, and you didn't write off your operating costs, go back and redo that. You can, your couch, your computer, your internet, your rent, who knows, that rug that you love. I mean, anything that is a new practice expense. Again, related to your business that's designated as your practice. Legal and professional fees, that's pretty obvious if you're paying, a tax professional, legal professional, advertising expenses, home office expenses. Now, this gets dicey because there are a couple of ways to calculate this. One is you literally measure the space and you determine the number of square feet, and that percentage of the square feet of your home is the percentage of the internet and the light bill and your mortgage and things like that. I always caution people about the home office though, because remember, if you're an LLC or a PLLC, you're trying to protect your home from the activities of your business. So if you're putting your business right in the middle of your home, that makes it kind of hard to, say, oh my gosh, this room is getting sued and I don't want it to be included. You know what I mean? It's just, so talk to a legal professional about that. Your office rent, phone and computer costs, credit card processing fees and bank fees, continuing education expenses. Yes. Now there are some free options for CEs, but going to CE conferences, the meals, all of that, meals, travel expenses, qualified business income deduction. This is from the 2017 Tax Cuts and Job Act. And I'm going to Google one more thing. Can I write off my personal therapy? Money spent on personal therapy sessions can often be deducted on your tax return as it helps you to improve your mental health and grow in your profession. So there's something that makes you go, right? Definitely want to check with your tax professional. But this is, again, tax deductions for therapists. That's 2021. We're going to do better than that. Here's January 2023. Okay, keep going. There's another one, March 7th. And it's by something called Therapy Brands. Who knows what that is, but what the heck? That's what we just did, isn't it? Oh, it looks the same. Okay, so that's what I have to say about tax write-offs. So let me pause. Let me stop the share because I'm about to talk about things that you can hold in your hand and sales tax and how to tax hack for that. So let me pause. Any questions about write-offs for therapists? I'm looking at the thread. Are we good? All right, I'm going to keep marching on. All right, so if you sell a thing, and if you're watching this from another state, you're going to want to check your own state's laws. But in Texas, if you're going to sell a thing like a book, right, something you hold in your hand, you're going to need to collect and pay sales tax. So sales tax is it can be weird. So the thing about sales tax, let's say, and I see you guys in the lemonade stand in the Badass Businesses Facebook group. I see people selling downloadables, printables, your books, lots of things that can be held in the hand. Sorry. And so I'm wondering if you applied for your sales tax certificate, because if you sell a thing, you've got to contact the state and get a certificate that says, hey, you're allowed to collect sales tax. And you're like, ooh, lucky me. Now the government knows I'm selling this thing. And it's hard to get rid of, because I don't really sell a lot of hold in my hand kind of books. And I use companies that collect the sales tax and do all that for me. But back when I was first just kind of selling them on my own and had them on Amazon, Amazon's weird. Like Amazon will ship from Ohio, they'll ship from Nevada, they'll ship from everywhere. And I had to know the sales tax for each one of those locations. It's called a nexus. And it was super confusing. So there is an app that I use that's a wonderful hack for those of you who are collecting sales tax, and it's called Tax Jar. And I'm going to look that up and share the screen. Oh, great question, Tracy. Hack apps to collect, save receipts. I do not save receipts. So here's my hack, Tracy. First of all, receipts suck, and they're a pain in the butt to go through and remember. So my hack is connect your bank account to your bookkeeping software. The bank account is dedicated to only business expenses, and your debit card or whatever you use is only used for business expenses. So I'll tell you how I do it. I have a bank account that's dedicated to my business. Then I have a travel rewards credit card. So it's a Chase Inc. rewards card. Everything that I spend on business, the only thing I couldn't use this credit card for was my rent. They were like, no, was it rent? Maybe it was, I don't remember. There was one thing they were like, nah, you can't use the credit card for it. But if they'll accept the credit card, I hook it up. And I'll show you that in a second, because I have to have everything listed, because, credit cards get compromised sometimes. So I have a list of like 30 things I have connected to my travel rewards card. So I get all these points, right? I don't ever pay for rent cars or hotels, right? So that's happening. And then my business, I hit click, it pays the balance on my credit card. And then my Chase card talks to my bookkeeping software. I hit click, all of those transactions automatically go into my QuickBooks software. It's automatically categorized based on rules that I set up. And so when it's tax time, my report, my P&L is super easy, because everything I purchased was with that credit card. Now, that's how I do it. You can also use a debit card connected to your bank account. So thank you for reminding me of that. That's actually a hack I had written down, and I think I just skipped over it. But the number one tax hack is to connect your business bank account to your bookkeeping software, and only use that debit card for your business expenses. Only use that dedicated credit card for your business. All right, I see some more questions, but I'm going to quickly, and we got some stuff in the chat too. All right, let me put that here. I'm going to share screen real fast, just so you can see Tax Jar. So Tax Jar is wonderful because it basically acts like a shortstop in a baseball game, right? It's going to go in between every single outgoing transaction, and it's going to count your gross income from the sale and how much you owe on sales tax. So when it's time to pay that lovely amount every quarter, you hit click and voila, there's your report. You pay that amount, and you're good to go. So again, tax jar for those of you who sell a touchable item. All right, let me go to the chat. Take a picture of the receipt and add it to QuickBooks. Okay, that's awesome. That's good too. Now my question though, Nikia, is does QuickBooks read it? Because I don't want to take a picture of it and add it, manually type it in. That's like too many steps for me. So Nikki, if you want to type it in, I'll answer. I'll tell everybody. But so my question is, when you take a picture of the receipt, does QuickBooks enter it as the expense and categorize it? And what's a good business travel? I like my ink card. Oh, Nikia said not sure. Someone else told me I could do that. Yeah, you can do it. Absolutely. Taking pictures of receipts. I know people that have little scanners and they scan it in. It's, to me, I call those touches, right? And it's wonderful when your business is small. But again, I like to go outside and do things. I like to, I got a Netflix show I got to binge, and that takes time. So the hacks, remember, I love hacks. Anything that's going to save me time. Like I don't want to look around at night and find my phone charger. That's why I'm glad I'm having a little command strip. I don't sleep in here. I just have command strips everywhere, just to make that clear. All right. So, okay, I answered the business. Oh, yes. And the card is in my, no, the card is actually, so with you open up a business credit card, it puts both names. So mine actually has my name and my business name, because that's weird. Like I'm checking into the hotel and I'm like, hi, my name's, Kate Walker Training. No, it's got my name on it and then the business name. All right, questions here. Awesome. You got that one thing already in place. Great, Tracy. You thought we needed receipts, real or virtual, for itemized proof. Well, that's a question for your tax professional. Here's what I'm going on. If I can hit print and document that Chase did that receipt, and remember, when I'm using Chase as an example, my credit card, and remember, you get a lot of information in that transaction. Like Chase is going to put down the name of the company, the type of company. Now, sometimes it'll be something kind of weird. Like if you got to stop at a roadside stand somewhere in Louisiana on your way back from a conference and it just shows up as, Joe's Gator Shack. Well, if that's where you got gas, that's what QuickBooks will then go in and you've got to manually put in, okay, Joe's Gator Shack gas, or, meal or something like that. But generally, if it's something like, I don't know, QuickBooks, for instance, right? For your 1099 supplies, that's a known expense for a known category. So those types of big kind of common things, and I think maybe that's one of the misconceptions of new business owners. We tend to think in terms of like, Anadarko or Exxon versus, you know what, you're really only going to have probably 10 categories of stuff that you do on a regular basis, right? I mean, your rent's going to go to the same person. Utilities are going to go to the same person. Phone's going to be AT&T every single month. So those are very common expenses. So I know counselors, we don't want to get in trouble. We want to make sure we have all the documentation. We want to hit print on everything. So I respect that. And if that's your comfort level, I come from a space of, hey, if I get audited, then I'll hit print, right? And I will go to Chase and I will go to, Joe's Gator Shack and, rebuild as I can. But, if I'm trying to just document these legitimate business expenses, remember, I'm not trying to pull over a fast one. I'm really trying to make these categorized in the right way. Save time. That's what I'm preaching. But thank you, Tracy. Those are really good questions. Okay, I'm going to come over here to the chat. QuickBooks will add a receipt photo as a transaction, and then when it links up with your bank account, it reconciles the two. Super cool. All right, so there's our answer with receipts. If you like receipts and you like QuickBooks, it looks like they play nicely with each other. All right, we're getting to the end here, so I'm going to hit stop. But before I do on the recording, when I talk about this in supervision, I want you to know that I do have a guide for you if you're looking for a clinical supervisor, or if you're a supervisor and you want to know what new supervisees are looking for. So I'm going to put that in the thread, but for the sake of time, I'm going to go ahead and stop the recording. So if we have questions, you guys can unmute and turn your cameras on and ask me. Yes, I'm sure I want to stop recording. Okay.